So, offset versus redraw. What I want to explain in this video is how the repayments are actually calculated and how they can be different depending upon the repayment type that you're making, okay? And I'll use this same diagram, one loan with an offset account and one with the redraw facility to demonstrate the two. So, in this first one, we've got a loan facility, and here you'll note I've made a principal and interest loan repayment. So what that means is you're paying a little bit off the principal of the loan, the $100,000, each and every month. Now, a standard principal and interest loan repayment on a $100,000 loan facility with an interest rate of 3% is $421 per month, okay? So that's the standard payment you need to make. Of that $421, $250 of that is going towards interest, okay? Not paying it off, which simply means that the difference between the two, which is $171, okay, is going towards principal reduction. Now, if you think about that last example, we got our tax return, $10,000 came in and we went bang and we dumped it into there, okay? So now our loan balance goes from $100,000 down to $90,000. So when the loan repayment is calculated the next time, we sit there and go, well, how much is my loan repayment going to be? Well, because it's a principal and interest loan, your loan repayment remains at $421. What changes is the amount of interest that's charged. So you're only charged interest on $100,000 on the new balance, which is now $90,000. And the amount of interest that you'd be charged on $90,000 is $225 per month. So what have you achieved by putting the $10,000 into there? Well, instead of being charged $250 per month in interest, you got $225 being charged in interest, which means that instead of $171 going towards principal reduction, you've now got another $25 going towards principal reduction. You've got $196 going towards principal reduction. So the thing I want you to understand is here, with a principal and interest type loan, just because you put extra money into it doesn't necessarily mean that the principal and interest repayment changes. It remains the same. It's just the amount of interest charge drops away, and as that drops away, the amount of principal you're paying goes up. If we go and use the other facility here, and again, whether it's a redraw or an offset doesn't really matter in this explanation, but here I've got an interest-only loan. And so instead of my 10 grand going into the loan here, I've dumped it into the offset account. So now what happens is I've got an interest-only repayment on $100,000. And the interest-only repayment on $100,000 is going to be what? It's going to be the same as this. It's $250 per month. That's what I'm paying each and every month. Now, if I go and put $10,000 into my offset account, then the amount of interest I'm going to be charged is on $100,000 minus 10 on 90 grand. Exactly the same as what we're talking about here. So the so this goes from 250, and the amount of interest I'm going to be charged is the same, 225. So no longer that, it's just that. But the key here is, because it's an interest-only loan, I'm only charged the interest. So the repayment is just the interest. So in this situation, my repayment will reduce. It'll go down by 25 bucks. So from 250, it goes down to 225. So it's important to understand, depending upon whether it's a principal and interest loan or an interest-only loan, when you pay extra money in, whether it's an offset account or into a redraw facility, in this scenario, your repayment will not change, but your interest charge will be less. In this one, your interest charge will be less, and therefore your repayment comes down because it's an interest-only loan. I hope that is an explanation that helps people understand, because sometimes they think, well, even if they're on a principal and interest type loan, if they chuck extra cash in, their repayment will drop away. No, that's not the case. Not with most facilities anyway. The next video I'm going to explain to you in terms of the benefits of an offset account relate to the potential tax deductibility down the track. So stay tuned for that one.